July 16th, 2025. Also, you might be able to hear it. I got a new microphone. I was using my computer mic beforehand, but I bought an actual microphone. Please let me know if the sound quality, I just want to make sure it's not worse. If it's making sure it's not quieter and sounds worse, as long as it is at least as good as it was before, that's fine. But I just want to make sure nothing got worse. But all right, with that being said, July 16th, 2025. Today, I would classify as a trending trading range. We had 3-4 legs down, a breakout, 2 more legs down. I basically think of trending trading ranges as when you get 3-4 legs in one direction. And I think of, more true trading ranges as when you're getting, 2 legs and the whole day looks something along the lines of this. So when you get this type of behavior all day, I think of that more as just a regular trading range. So 3, 4, 5 is a bear micro channel. Odds are we're going to go at least one tick below 81. So I thought it was logical to take the short on 5. Obviously, I did not take it because I do not sell below or trade before bar 7. But I don't think there's anything wrong with looking to sell in this area and looking to get a second leg down. You can see we got a complex pullback back to the bar 2 low. It's not a coincidence that we reversed on 17 at the bar 2 low. This, they're open gaps, right? Yes, there's open gaps, but the gaps are going to close. Gaps close in trading ranges. And most of the time, when you're in most of the time when you're in a trading range, gaps are going to close. And we have 4 legs up, a complex pullback back to this area. Odds are you're going to get another leg down. So some traders will sell that bar 2 low, expecting to get another leg down. And that's exactly where we went. You can see traders who sold the bar 81 low yesterday did a reasonable thing. Odds are we get a tick below the 81 low. So traders will sell and get that's the symmetrical second leg from the whole move. 18, 19, 20, a decent 3-bar micro channel. It is an expanding triangle, so you have to be aware there could be a deep pullback, but ultimately I thought that 18 through 20 was a decent trade. I did buy the close of 20. 21 is expansion as follow through. So 21 is bigger than 20. When you get expansion as follow through, I only found 2 losing trades. So I had a 90% win rate when you get a bar like 21. When you get expanding follow through, I found 90% of trades are winners. And when you get immediate follow through, 96% of the time, you're going to get at least a half an R in an easy, a way to get out, break even. Obviously, this is part of that 4% of the time. So if you go look at every single 3-bar micro channel that gets a 4th bar, 96% of the time, you're going to be able to get at least half the range of 18 to 20 at some point before an 150% stop loss is hit. And that's basically your way out if the trade starts to go against you. This is part of that 4% of the time. Usually, I looked at examples of that 4% of the time. Usually there's stuff like this, where it's like very small and against a move. It's very unusual. I even went and looked at, I have divided up my losses into, I've categorized them. And 80% of the time, it's either a late leg or you're trading really against the regime. And so I figured could eliminate the vast majority of my losses if I don't trade late legs and don't trade against a very tight channel, which I didn't do in either one of these situations. But about 4% of full losses came from buying at the top of a trading range, which means that most of the time when you're buying at the top of a trading range, if it's an early leg, right? So if you're trading an early leg and you buy high in a trading range, it usually ends up being okay, just because even if you get a deep pullback, 18 through 21 should still get a second leg. But 22, giant bear bar, 22 is going to be big enough to get another leg down. So you can sell the close of 22 for sure and expect another leg, or you could sell the close of 23. Where does 24 test? It tests the 18 low, the breakout point. Traders sell, they sell more at the breakout point, they get a second leg down. I don't know if it got a symmetrical second leg. I hadn't checked until just now. Okay, it actually got one to the tick, basically. So that's pretty expected. You can sell, you can scale in, and you can make money. 27, a big bull bar closing near its high. 2 legs down. Bears want a 3rd leg down. And I don't think it's unreasonable for the Bears to think that this is strong enough for 3 legs down. It did not end up happening, but I think that it's okay to think that the Bears are going to get a 3rd leg down. However, 28 is follow through. So the Bulls have a reversal, or I guess a breakout and follow through. Buyers below 29, 29, 30 consecutive big bull bars. Let me just zoom this in a little bit. The Bulls probably have to touch the 21 low or potentially the 21 close, the area where the Bulls got trapped. We had a pullback and then 36, 37, and 38. I did not buy 38. I thought it was a late leg. I had 1, pullback 2, pullback 3 legs up. So I thought it was tough to buy up here. As 40 was falling in this area, I considered buying because I can get out if it closes near its low. And if it reverses, then I can, make a profit. So it's a little bit less risk because you're just in the trade for less time. 40, 41, 42. I again did not buy the close of 42. I was too worried that it was leg 4. So I waited to see if we got a breakout above 21, which we did. So I bought below 45 during 46, and I ended up exiting after 48. 3-bar micro channel against me. So we're probably going to get a complex pullback now, which we did. I think you can just buy and just hold and expect that the complex pullback gets 3 or 4 legs down and then reverses back up. I think that's reasonable, but ultimately I decided to wait. And we got 4 legs down, reversal up 59, 60, and 61. I did buy the close of 61, and I got 1R up into this area. And then we got 3 legs and then 1 more leg. So I would say it's a trending trading range day. It was a difficult day. This is a really difficult, sometimes you're just going to lose. It's pretty unusual. That's the first full loss I've taken in quite a while. I believe I had 2 or 3 last month, and that's the only one I have so far this month. I did lose on a trade, I believe early in the month. By full loss, I mean an 150% stop loss is hit before a symmetrical second leg. I obviously lose trades, but full losses are very large. And obviously when you start out with trading, your stop's going to get hit all the time. But as you get better, it gets smaller and smaller. So when I did my study, I should take about 1 full loss a month. I did take a full loss on this trade as well. However, I only bought the close. I didn't take any of the scale-ins, and I bought small on the close. So the quote-unquote full loss was like 20% of the size of a normal full loss. Versus over here, this was a legitimate full loss. But I think, I would take that trade again. So I'm okay with it. The daily chart. Let me just. Okay. So it could be a similar situation to like we got today, where you get a couple legs sideways down and then you continue higher. Like I was saying, we probably get a couple of legs from this, but it's not necessarily going to go all that far down. You can see we got a tick below the July 7th low, or a couple of ticks below it, and then reversed up. It's still a tight trading range, but this tight trading range is probably just going to be a bull flag of some sort. The weekly chart, it's becoming disappointing for the bulls. The bulls wanted to see a bull bar closing near its high. It is an outside bar, which is also disappointing for the bulls, but it's basically a high 1 buy, and it's not looking all that great. So I'll be interested to see how this week closes. If it becomes a big bear bar, well, first off, we're probably going to test this high. 61, 66.5, I believe, is the high. Yeah, so we're probably going to test the high of February 17th and reverse back down. All right, that is going to be it for this video.